Hello, thank you for joining me. Today I wanted to cover refinancing. What is it? What are some of the goals that you can accomplish with a refinance? And then lastly, how do I evaluate refinances? If I'm talking with you and we're looking at the feasibility of doing that, what are some of the basic things that I'm going to cover with you? So I'll start off with what is a refinance? Really, all it is we're taking your existing mortgage on your home and we're just giving you a brand new one. We're taking that old one, which financed the purchase of your property, and we're going to refinance your property with a brand new mortgage. Typically, this is with a new loan and at a lower rate, but there are different options here that I'll do my best to get into. We'll just skim the surface on that. What are some of the things that we can accomplish with the refinance? One, of course, is going to be to take advantage of a lower rate, lower your monthly payment, lower the total interest that you're going to be paying on your loan, or lastly, even to just cash out on some of the equity that's accumulated in your own home. Maybe you are at a $200,000 mortgage balance, but your property is appreciated over the years. Meanwhile, you've been paying your mortgage payment down. Now we can kind of take advantage and cash out to you in the form of a check, even some of the equity that you've accumulated. And that would be what we call a cash out refinance. Of course, we are able to just do what we would call a rate and term refinance or a limited cash out refinance. In those cases, you don't get cash back or you get limited cash back, which is going to be less than $2,000. But they will achieve the same thing. You'll be taking advantage of a lower rate, a lower payment. Meanwhile, we are able to also finance the cost. There is a closing cost associated with the refinance, but not always do you have to come out of pocket for that. So just know that, let's say there is a $10,000 cost to refinance. Because your property is appreciated in value, we can use the equity from your home to pay that closing costs and really just build that into your loan so you don't come in out of pocket with a penny. Meanwhile, we could be looking at a lower rate and lower monthly payment. So, really accomplishing a lot with what seems like no money out of pocket, nothing. So, I'd like to get into my analysis of the refinancing. This is just real basic. I'm going to skim the surface. If we work together, I will definitely go a lot deeper and be a lot more specific, but just for the purpose of this and kind of getting a general idea, we'll get to the chalkboard, the whiteboard. In this example, I want to use an original loan of $250,000. Maybe this is the loan that you use to purchase your home, or maybe um, this is just the loan that you have on it right now. Maybe this was already refinanced. Anyway, your original loan, the one that's on your property right now, has a mortgage rate of 4.75%, and that will give us a monthly principal and interest payment of $1,300 a month. Now, you see this video and you're thinking, yeah, maybe I should refinance. Maybe there's something to this. I've been paying into my mortgage for many years now, and let's say now my balance is down to $200,000. On top of that, today's rates have come down a lot from 4.75%. Today we're at 4.25%. This is just for example, although that's a little more or less where we are right now. Um, Today we're at 4.25%. Because we have a smaller loan balance and a lower rate, your monthly payment is now going to be $983. So not only did we drop your rate 0.5%, but we're going to be lowering your monthly payment by $317 each month. And that's kind of nice because you just get $317 extra every month. You don't have to pay that into your original mortgage, and that's always nice. Now, there is, as I mentioned before, a cost associated with refinancing. For this example, I'd like to use $10,000. Um, and this is just going to be the real quick and dirty way that I like to evaluate. If we meet in person, I'll go a lot deeper. But $10,000 to refinance, and you're thinking, well, that's kind of expensive. But I'm going to be saving $317 every month. Now, I will have recouped the cost of my $10,000 cost to refinance in 32 months. So knowing this number here or this amount of time here, my follow-up question is, hey, do you see yourself staying in this property for longer than 32 months? Again, 36 months is going to be 3 years. So are you going to be there for the next 3 years? Because if you are, in just the 32nd month, you will have recouped the cost of your $10,000 closing cost to refinance. And sometimes they're like, yeah, we are going to be there probably for 5 years. So this looks like it makes sense, but I don't have $10,000 to just go ahead and do this refinance. That's okay. Again, we can use the equity in your home to pay for this. So maybe instead of refinancing for $200,000, we refinance you for $210,000. And that way, you don't come out of pocket for anything. You're just going to show up to loan signing, sign documents, and end up with a lower rate and a lower monthly payment. And so we would just have a new mortgage loan amount of $210,000 while still accomplishing these here. So you don't come out of pocket, which is the nice thing. Um, we can structure it like that. So you don't come out of pocket for anything, but also pay $317 less every month while also taking advantage of a lower rate, lower interest paid over the life of the loan. Um, so there's a lot of benefits. Um, Refinancing doesn't always result in a lower payment. That's because maybe you are looking for the cash out refinance. I started with $250,000 loan balance. I paid it down to 200,000, but I want to do some improvements to my property. Well, we can give you, you have a 200,000 mortgage balance, but what if we gave you a new mortgage for $250,000? In that case, you're going to be have a new loan of $250,000, but we give you a check for $50,000 at closing, and then you can go and do your home improvements with that. Also, if we do that, we're still going to be looking at lowering your rate. And if we borrow the same amount at a lower rate, you're going to be paying a lower monthly payment anyway. But that's just an example of um, if we're taking out more equity, cashing out, the payment doesn't always necessarily go down because you're borrowing more. But anyway, that's really just refinancing 101. I'd love to talk story with you about where you are with your rate, with your mortgage balance, and how I can help if it even makes sense for you to refinance. I love having those conversations. Please don't hesitate to call, email, text me even if you do want to discuss. And thank you very much for your time. I really appreciate it. Bye.